we've been talking about adjusting entries in the accounting cycle. And remember, we've been talking about making adjusting entries. Then we prepare the adjusted trial balance, and from that fabulous adjusted trial balance, we can prepare the income statement, statement of retained earnings, and the balance sheet. Also, from the adjusted trial balance, we can get ready for the next period. In other words, we can close our books. In other words, wipe out our revenue and expense accounts because, this year I only want to pay taxes on what my revenue and expenses were this year. I want to start next year with a zero balance in my revenue and expense accounts so I can start counting them all over again to pay taxes on them then, not now. So, looking at my adjusted trial balance, let's see how we prepare those closing journal entries. And there's 4 kinds. Step 1, close our revenue expenses. Well, looking at this, I see one revenue expense, one revenue account, and that is service revenue. So service revenue has a credit balance of $50. So to prepare my closing journal entries, to close revenue, I am going to debit, well, it has a credit balance, so to zero it out, I would debit it. So debit service revenue, $50. Credit, I need an account. What should I call it? Well, there's a special account we use just when we do closing entries, and it's called income summary. So I'm going to credit income summary, $50. Now, some books that you'll see call this income and expense summary. So your choice, income summary or income and expense summary. So that's step 1, close your revenue accounts. Step 2 is to close your expense accounts. Now, if I look back at my trial balance, I had 2 expense accounts. I had supplies expense and insurance expense. Both of these have debit balances. So to close these or to zero them out, I would have to do the opposite. So I'll credit these accounts. So what I'm going to do then in step 2 is I'm going to debit income summary, and I'm going to credit. Now, I just can't do expenses. I have to do each one separately. So credit supplies expense and credit insurance expense. And the supplies expense had a balance of 15. So by crediting supplies expense, its resulting balance in the account will be 0. Insurance expense had a balance of 15. So by crediting it, its balance will be 0. Which means now if I add these credits up, the debit has to be what? 30. So that's the second one. The third one is to close the income summary. And how we close the income summary is we look at the balance in the income summary. Well, right now I've got a credit balance for the revenue and a debit balance for the expenses. So the balance in the income summary account is how much? $20, and it's a $20 credit balance. So to close it, I'm going to debit income summary, $20, and I'm going to credit retained earnings. Why? Because I'm retaining these earnings or this profit in the business, aren't I? $20. So by making this entry in my income summary account, remember I had a credit of 50 and a debit of 30. So I had a balance of 20. By making this entry, The resulting balance in the income summary account is now 0. So those are the first 3 steps of the closing journal entries.